Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The dollar is lingering at the highest level since breaking down in May of 2017. It's priming for a breakout. However, this is not the first time we've been up here. It's failed multiple times this year. 98 is the benchmark. You got a lot of different highs that have been up here, as well as a big retracement level. We need to get a weekly close above 98, and this week is just getting started. So the dollar's facing it right there. Tomorrow we have FOMC minutes. They will be crucial. How could they set up for this June meeting? And potentially has the Fed talked about what would cause them to cut rates? Remember, right now they're pricing in roughly a 70-75% chance of cutting rates this year. So we do think that is a little over priced in, and we could potentially see that come down a bit, which would ultimately support the dollar. Right now, though, it's not about dollar strength, because it's really about the best house on a bad block. The euro is one of those bad houses on the block, because we're seeing this thing, it can't really come off the ground. Growth is just bad at best, and it is trying to turn a corner. There's no major data coming out of Europe tomorrow, but Mario Draghi does talk in the morning, and really what you want to look at is the technicals down here. This is another test down into a thick area of support in the euro, 111.5, up to 111.80, and one of these times it is going to just break down through there, so you do have to be careful. And right now the technical setup favors being long the dollar and favors being short the euro, so cautiously look at that trade. And then again, tomorrow these FOMC minutes are going to cause and swing some volatility, so be prepared for those at 1 p.m. Central Time. And then next, we're looking at the yen. A little bit of dollar strength today, but it was more about the safe haven weakness. You saw the treasuries get hit. Gold has been under pressure, and really that's what we're seeing here in the yen. The yen is slipping back below the 91 area. There was some support there yesterday. However, this is where we're testing into some previous swing lows and aligns some other technical levels, about 90.30 to 90.50. We're testing right into there, and it held today. And ultimately, what you want to be careful about is if this equity market rally if this pop gets some legs and tests up into the highs of we were seeing last week, or if it breaks out above there, it's going to pressure the yen, especially if the dollar just slightly upticks a little bit. So be cautious with the yen and those safe havens. Particularly, look at gold, and gold is just really hard selling there last week. There is a room for it to wash out a bit. And you kind of feel that way with the yen a little bit here. So be cautious after this day of weakness if those equity markets get going a little bit higher. And then lastly, the Aussie, there was a lot of resistance way overhead. We had a major 3-star resistance level in the FX Rundown last night. It didn't even get anywhere near there. Just the minor resistance level it stalled at. We're back below the 69 mark here in the Aussie, and looking at some additional pressures potentially. So keep an eye on that. And then one thing that has been pleasantly upbeat is the Canadian dollar, holding that 74 mark. Major 3-star support there. Again, the USMCA, the old NAFTA deal, has been able to start to get some progress. The White House lifted those aluminum and steel tariffs, and what that has done is really support the Canadian dollar. There's been some better data coming out of Canada recently. Tomorrow you want to look to, I believe it's retail sales at 7:30 a.m. Central Time tomorrow in Canada, and that's going to swing that Canadian dollar, but it's moved off major 3-star support pretty well, so see if they can get some further legs. But the thing you want to watch out here is there is a lot of overhead resistance, and if the US dollar gets going, it's going to really keep a ceiling there on the Canadian. So just be cautious if you are buying this rally. What we would rather be looking for is potential fade to higher prices in the Canadian dollar. Give us a call. We're here to talk about anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. Is not suitable for all investors. Thanks a lot.